fixed manufacturing overhead, right? And did you see that this includes non-cash depreciation expense as well. So why we excluded the effect of depreciation? Because we want to find out cash disbursement, because we will be making at the end cash budget, and in cash budget only those things will be returned which either cash inflow coming to the business, or cash going out from the business. All the non-cash activity is going to be excluded. So many students, they confuse why we have these two overhead. Overhead is only one, this one, total manufacturing overhead. This is the overhead, and this is the cash for the overhead. So that is the difference here. So now we need to find out what is the product cost of finished goods. Direct material, direct labor, manufacturing overhead. So direct material, it takes 5 pounds of material to complete 1 unit, right? And 1 pound of material costs 0.4, means $2 for direct material. It takes 0.05 hours to complete 1 unit. So multiply by 10, $0.5 is going to be paid on per unit. And manufacturing overhead going to be based on direct labor hours, So cost is 49.7 and per unit requires 0.0 hours. So you multiply it 0.05. So it cost us $4.99 to complete 1 product. So our product cost is going to be 4.99, right? So budgeted finished goods inventory. Let's talk about this. Ending inventory going to be 5,000, right? So we need to keep 5,000 as an inventory. And where it's coming from? Production budget, right? So look at our quarterly production budget. Over there, it's going to be 5,000 ending inventory. And ending inventory cost going to be, that will be shown on balance sheet. So that's why we cannot write down the units on balance sheet. We have to write down in dollars. So we have to multiply from which amount? The product cost, 4.99. 4.99 multiplied by this 5,000, which is ending inventory in the production budget. So look at that, where we are going. Now we are going to make the cash budget, but before cash budget, we must make the sales and selling and administrative budget as well. So we will be making that one. So our hardest part is done, right? The hardest part is to calculate per unit cost, which we just calculated. So any question regarding making the product cost? David, Sipade, Christine, Min, Chandra?
Sir.
Yeah.
Everything clear?
Yes.
Yes.
Good. So that is the hardest part here, because many students, they confuse, okay, sir, it's going to be 49.70. No, because question says it is based on direct labor hours. And for 1 unit, how much direct labor hours used? 0.05. So that's why we multiplied with 0.05. Okay, now preparing selling and administrative budget. Here we go. So at Royal, selling and administrative expenses budget is divided into variable and fixed. So variable selling and admin expenses are 0.50 per unit sold. So unit sold, where we get it from? From sales budget, right? That they will be selling this much units, multiply by 0.5. That's it. That's our variable. And 70,000 is our fixed, including 10,000 depreciation. right? So our income statement expense budget gonna be including 70,000, but our cash payment to these selling and administrative, we will less this 10,000, because when cash is involved, we do not include the effect of non-cash item, which is depreciation. So let's make that. So we know that 0.5 multiply 0.5, right? Or 50, yeah, 0.5. 0.5 multiplied by the April sales. So 10,000 is going to be our variable admin and selling expense. Fixed expense is 70,000. So 80,000 is our total selling and admin expenses that will appear on income statement. But how much we pay for April selling and admin expenses, less the effect of non-cash expense, 70,000. So this will go in cash budget and this will go in income statement, right? So can you make the quarterly? Just paste the figures here. That's it. So quarterly here, 0.5. You add all these costs, fixed cost here. You less all the effect of non-cash. So $30,000 going to be needed in the quarter, right? Simple one. Now it's time to make the cash budget. So only those items going to be included which have backed by actual cash outflow or inflow. So what is the pro forma, or what is how we make the cash budget? First, cash inflow minus cash outflow. That is your requirement, budgeted requirement, and if there is any other requirement, you add it or less it. That's it. That is the cash budget. So we already did extensive cash budgeting in our accounting class. So this is basically just a revision for you. Here we go. So cash budget is divided into 4 sections. Number 1, cash receipts, all the cash inflows, right? Excluding received from financing. So if you're asking loan from the bank, that is not the business inflow, right? We will be writing down into net cash outflow. Then we will be writing down, okay, borrowings or repayment. It's like that. Second, all the cash disbursement, excluding the effect of financing cost, interest. And the third step will be called, if we have a positive number, that is excess. If we have a negative number, we have deficiency or cash needed. This is cash surplus. This is cash needed. Let's just talk about. So this is all the things that we have given here. So Royal maintains 16% open line credit for $75,000. What does it mean? It means if the company account is empty, so bank will give them at $75,000 as a loan and charges 16% interest. So if a check comes to the bank and it is short of $60,000, bank will be paying $60,000 on your behalf and let not that check to as a non-sufficient fund check, because
Sure.
it's a huge disrespect in business community if you write down the check, another party present the check to the bank and the bank says this check is bounced or this is NSF check. It's a huge penalty by the court as well. Yes, David, what do you want to ask?
No, nothing. I just cleared it out.
Okay. Plus, you have to maintain a minimum cash balance of 30,000. So if in any month your balance is 10,000, you will put 20,000 to maintain this 30,000, right? Or if your balance is 40,000, so what is the investment cash? Only 10,000. That is used for other purposes. You can acquire, you can invest in business, you can give loan to your employees, but 30,000 you can just maintain in an account at any time. borrows on the first day of the month and repays loans on the last day of the month. So this is like that. You borrow at the first day of the month. Interest is calculated on monthly basis. 30 days are involved. And you have to pay cash dividend in April. So in April, you have a cash outflow, 49,000. You also need to purchase in May 143,700 in equipment and 48,300 in June for equipment as well, and both paid in cash. So cash payment in May and cash payment in June gonna be there as well. And you have 40,000 cash balance on April 1st. So you start from cash balance 40,000, cash collection on April, go to the cash collection right after sales, what we make cash collection against sales, $170,000, right? So total cash available, total cash inflow or cash collection going to be 210 or 210,000. Cash disbursement, material, labor, manufacturing overhead. And remember, manufacturing overhead, cash involved, excluded non-cash expense. Similarly with the selling, non-cash expense going to be excluded from there. So you just pick the numbers here. So this 40,000 is coming from expected cash disbursement for material. This is coming from labor. This is coming from manufacturing overhead. And this is coming from selling and admin. But remember, the question says 49,000 is going to be your dividend that is coming in April. So your April payments exceeded than your collection. How much cash you are short of? 20,000. And remember, you need to maintain the cash balance of 30,000. You are negative 20,000. How much you need to borrow? 50,000. When you borrow 50,000, 20,000, this deficiency gonna be paid off, plus 30,000 gonna be, according to your contract, 30,000 gonna be maintained at the end of the month, right? Okay. In May cash collection 430,000. In May, you have to pay for per equipment 143,700. And now you have a excess 30,000 here, right? When you have a 30,000, do you need any further loan or something? No, because we are with the bank's contract, 30,000 is there. June, you have this much cash, and you also need to purchase 48,300 as